Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are looking at the Kroger company, ticker KR. This is one that I've held for a little bit. It's currently the position that I'm up the most on, and I'm looking at maybe getting some more of this. So we're going to look at the year-end numbers. It doesn't look like the earnings come out until next month, so we'll be sure to look at those. But we're going to take a quick look at where it sits before then. So since I think it could potentially be a value play, these earnings might really help bolster it, so we want to get a look at it ahead of those. So we see here the chart. It has been on a very nice uptrend. In February of 2022 just shot up, and it's kind of returned to trend since then. Just a nice solid trend, not even a downtrend from here, at least nothing that I can see. More recently, it's trading in the range of 44 to 49. We'll see what happens with that. The earnings would probably help it break out if they're good enough. And then we could be back up to the 60s, which would be something interesting to see. So let's take a look at the financials and see what they're telling us. Here we have the financials. And off the bat, we see we have one red flag. Cost of goods sold has been increasing at a pretty quick rate. The pace that it's been growing is faster than the top line revenue has, which, if that trend continues, is concerning. Last year it was 8.3. We know inflation has been high. They might be eating that cost and helping the consumer a little bit off those costs. So we'll see how these trend over time. We have a yellow flag on expenses. Those expenses are up, but less than the top line. So it's not a huge deal, but it is something to keep an eye on. Liabilities have increased. This last year they did decrease, but since 2019 there's a pretty big increase, 2.6% compounding over that time period, and that's something to keep an eye on. Hopefully they can continue with this drop that they have. Free cash flows, we don't really want to see decreasing. We do see that it's a little all over the place, 1.5 down to 1.2, back up to 1.4. Above 1.5 this year would be great, and hop back on a trend, an uptrend with that. But we will see how everything shakes out. So if we go back to the top with the top line revenue, we see they have decent growth. We look for something between 5 and 10. We see 6.6. Gross profit coming in slightly lower than that, 5.6, and a net income of 10.6. That is something that we really like to see, that double-digit growth. The EBIT also growing, that similar pace, 15.2. The gross profit is down a little bit. It went from 22.1 to 21.4. Again, that might be a little out of their control, as resale for them to try and follow the commodities markets super closely. And at the end of the day, they want the consumer to come back. So they'll take slightly lower profits just to sell more volume. At least the net profit has increased, though, going from 1.4 to 1.5. And the earnings per share, they're very good on driving that earnings per share up from 2 to 2.2 to 4.2. And analysts are expecting 4.49 for this year. So that's something that we really like to see. And it currently is trading at just shy in 11 PE. Traditionally, we can see that it's around a 15.5 PE. So that'd put the value of the stock around $65, up nearly 10% from where it currently sits, and forward-looking value of almost $70. The assets and the liabilities, I feel like the liabilities are a little high in comparison to those assets, but we have a positive book value that is growing nearly 12% year over year. Even though that is happening, we're only getting a book value, fair value for this stock of $26. So it is not a asset play for this stock. It is a It is the earnings that are really driving the value here, and the fact that they're able to grow those at such a pace. Free cash flow, we see the free cash flow is also a little all over the place, 1.5, 1.2, 1.4, down about 2.6 year over year. Even then, it's giving us around a $40 fair value, just shy of where it currently sits. And at this trend, we'd be looking at about $40 again going forward. So for cash flow, it's some downside would be appreciated for a buying opportunity, but it wouldn't be bad. Share count, we see that they're buying back their shares about 3% a year, which is amazing, going from 788 to 716. Shareholders' equity is increasing year over year, about 5.32% year over year. And that's moved from 8.6 to 10, something that we really like to see. Dividend, they're not a huge dividend payer. Right now they're yielding 2.28%, but they are a pretty big grower. Last year they grew at almost 24%. They've been growing it compounding since 2019 about 17.6%. And so traditionally it's trading for about 2.15%. And that gives us a value of $48 for that dividend that the market would be willing to pay. And then we have Peter Lynch's formula, because they have such amazing growth on their earnings per share and a decent dividend. We'd say that they're very undervalued right now. And looking at all the numbers, I mean, they check almost all the boxes. They actually have a positive tangible book value, something that we haven't seen across a lot of stocks. We've even seen some negative shareholder equities, which is a huge concern. They're driving their total revenue in the range that we like to see. It's above 5%. Their ROE, at least as of 2022, was above the 20% minimum that we like to see. It's just low margins, but that's how the grocery business works. So you want to find something that is able to drive value in a boring sector that it doesn't get a whole lot of excitement, but it gets money. Clearly, it gets money. And this is a very, very popular stock amongst institutions. This is a stock owned by Warren Buffett. I have held this stock for quite some time, and I still think that there's some value in it. When it hit about the $60 range, I thought it was a little overvalued. I did sell out some of my position, but looking at this, I mean, it's in a pretty good spot. If they're able to continue driving earnings the way that they have, I mean, a forward value of $70 on that metric, 40 to 70 is a pretty large range. The cash flow, as long as they're paying this dividend, isn't too important. So I think that could help narrow it to $50. I think this will be my next stock that I try to build up to 100 shares and see how that goes, because I used to buy a lot of my groceries here. I've kind of moved away from that because there are other companies like Aldi that just offer better value and less artificial foods. But I give this one a strong buy. I'm definitely going to be buying up more. Even though I'm up about 50% on my position, I think it would not be a bad place to store my money. I think that there's more upside potential than downside to it. And especially if the deal with Albertsons goes through and they buy a whole nother grocery chain, we could see these numbers go much higher than they're currently at. So that's why I'm excited to look at these earnings and see where the stock's going to go. Thank you guys for watching, especially if you made it this far. Please like, comment, subscribe. Let me know what stocks you want me to take a look at, and I'll catch you next time.